our channel from last 1 or 1.5 months, no, I used to tell you for long that we are going to reach 26,000, even 27,000 by this year. And actually, the 26,000 has come much more early than I expected, also. No, because the last interest rate cut happened at that time, also. I used to tell that, no, these are the targets which is near to us. The reason is simple: liquidity is going to chase where the growth it is. And where is the growth? Growth is there in India, and you can see the way FI has come back. This last Friday, we there was an almost 43,000 crore rupees of buying by FI. Of course, out of the 14,000 crore rupees was a cash buying. But what it shows that FI are now coming back in India. Today also, there was little bit buying yesterday also, and today also there was a selling, but DI also bought today. So if you take in all this in context, no, what is the current situation after 26,000? We are going to talk about that in detail. And just to want to know, and your opinion also, what do you think about next move? Just put it in the comment box. But yes, and also, guys, if you want any stock and sector to be reviewed from my side, put it in the comment box. I do check it every time, and I do reply each and every of your comment also. So from here, are we going to reach 27,000 by year end? I think so. The reason is liquidity is too much. Again, no interest rate cut. Now it may happen 50 basis point. The US has already cut, and there has been talk going on that this year Powell told that they are going to cut 25 basis cut in this year, but it may happen they may cut more also, because there the things are no, like election is coming and lot of pressure is there. And plus inflation is little bit cooling down, but overall pressure is there also, that no interest rate cut should happen. And next year also 1%, another after that 2026 there is in talk of 50 basis point. Again, yesterday China also cut almost 50 basis point. China, is in very very bad shape. There, if you talk about real estate, has fallen a lot. Again, they are now cutting the interest rate left, right, center, because they want to save their economy. China is slowing down a lot. And when we talk about the sorry guys, manufacturing sector and all that, that is also now slowly gradually picking up, but not as fast as it should be. And now their focus is there to bring manufacturing sector up, because they think that real estate is in a big mess. They'll not able to recover so much there, but at least if they are able to concentrate on manufacturing sector and more export, then the economy may stabilize. Even there has been talk a big amount of export is happening. More than 1 lakh crore, 1 lakh cars also they are going to export in next 6 months. That is the talk going on. And so there is a big targets going on in China also. They are trying to recover as much as possible, and that's why they are in cutting the interest rate. Now, even Europe is cutting the interest rate. So across the globe, interest rate is cutting. And again, in India, inflation hopefully will cool down, because the oil is stabilized around 73, 75. That is a plus point. And again, because of good rain, you can see the inflation going down in India also. And it may happen that by next month onwards, let's see, hopefully RBI is going to cut interest rate. So all these things, if you are talking about cutting interest rate, liquidity is going to come. And liquidity is normally chasing where there is a growth, and that is where no liquidity may come to India, and FII, more FI flow will come. If you talk about FI, in last 1 year, the overall, they are the net sellers. They have sold almost more than 1 lakh crore rupees of equity. And when we talk about DII, they have net buyers of almost 3 lakh crores of equities. Now this this gap is going to narrow, and hopefully FI is going to buy from here. And so if FI is coming in a big way, of course our market will have a big no push up from here also. But now at this level, where to concentrate? That is the main question everyone is asking. Then the some of the sectors I just wanted to talk you in favor is that, first is the, of course, banking sector. You can think about it, because you see banking sector is not at all participate in last rally. Almost you can say 1.5 2 years of banking sector, because of the CASA problem, no current account, saving account problem, no, it's not able to participate again. So that hopefully as the interest rate cut goes down, their cost of borrowing will go down, and it may impact positively in net interest margin. So if there is a positive impact on net interest margin, then I think things will be stabilized. And one of the reason why their CASA and the cost of borrowing is on a higher side, mainly why cost of borrowing is a higher side, because now as they are not getting current account, sing account, no, that deposit they are not getting, they are giving higher interest rate at a larger deposit level. And when you are giving a higher interest at a larger deposit level, of course it will impact the cost of borrowing, and no, of course it will impact the net interest margin. Okay, so the net interest margin is impacted because the higher interest rate is given at a the borrowing whichever, sorry, on the deposit which is at a high level. Okay, and so this is where the cost of borrowing may go down, and this will impact positively for NII, and as a result things will be hopefully stabilized. But one of the point with today, if you see, PNB has come up with 7,500 crore rupees QIB. Now this QIB, if you talk about, no, they are coming with a QIB. What is the reason? Maybe they are not getting the deposit, and that's why they are coming with a QIB. So all these point also you have to keep in mind when you are talking about investing in banks, because banks are not in a great shape as it used to be. The reason is simple. The main reason is CASA, so that you have to keep in mind. But yes, from here, hopefully, as the cost of borrowing go down, when the interest rate cut happens, I think banks will be beneficial, and that's why you can see a little bit rally coming in. You can say large cap banks and all that. Another sector you can keep in mind is the IT sector. Of course, IT sector is much more dependent on BFSI, that is banking, financial sector, and mainly for US and Europe. So if the interest rate cut happens at the USA level, what will happen that so many banks got no, so many means few banks got defaulted almost 1.5 year back, 1 year back. Now they will be in a better position, and most of the contracts are coming from a BFSI to our big large cap like TCS, Infosys, and no HCL and all that. More than 90% is coming to the export to US and Europe. Now when this type of thing happens, what will happen, the negotiation power of IT industry will also go up, and I think there will be cost cutting and all that. Again, the negotiation will go down, and it will be beneficial for the IT industry. Of course, will benefit if the US again come up and Europe again come up. So another sector is IT sector, which already shown a sign of recovery. The third sector you can talk about is the chemical sector. Chemical sector, there also 85 to 90% is export only. So when you have when this type of export across the globe, again China is also another problem, because they are dumping a lot their chemical goods and all that, because at a much more discounted rate. But now basically this chemical sector is going to go up if the consumption level across the Europe and now USA may go up, and as the interest rate cut happens, no more fund you have in your pocket, the more you spend. So chemical sector is going to go up. If possibility is there that maybe in next 3 months, 6 months, it may do well. So all the three sector will be benefited. Some of the other sector may benefit. It is the automobile sector. Of course, NBFC. Sorry, I forgot to tell you about NBFC. Same point. The cost of funding may go down, and no, that NI may increase, and of course, in the same level with the bank. When we talk about the even the automobile sector, they will also be benefit, because as the interest rate goes down, the more the demand will be. And again, the festival season is coming. Anyways, it is started, but Navratri and this Diwali is coming, and if the interest rate goes down, that will be benefiting to the you can say the automobile industry also. So automobile, of course, there was a good rain, and no, that also benefited too many two wheelers and all that. Of course, electric vehicle penetration, all that going on, but yes, automobile will be in a beneficial part if the interest rate goes down. So these are some of the sectors, which you have to keep in mind now if you really want to by any other sector and all that. Okay, and some of the sectors which also will be benefit to the low oil prices is nothing like a paint industry. However, I am not too much bullish on the paint industry, because of this Billa coming into picture, Billa coming in a big way, and no, the new product which they have already brought, no, this is giving a tough competition to Asian Paints. Again, other narrow leg and Berger Paints and all that, no, they are also little bit struggling. Of course, they are going up slowly and gradually. Of course, oil gets stabilized, it will help to the margin. But if you talk me that no big gains, I think they are behind us. That is what I feel. Of course, guys, I am a SEBI registered research analyst, so please do your own research before investing. But yes, these are the points you have to keep in mind now when you are talking about investing in the paint industry. Okay, of course, agrochemicals and all that, because of the good, it is going to benefit. And chemical sector, anyways, I told you, you have to keep in mind from here. Now from here, 26,000 level, are we going to go 27,000 very fast? We may go, we may go, guys, because liquidity push is there. And now if FIs start buying, you may see a big rally. Now, is it an overvaluation? Yes, it is. It is an no. The valuation is quite high of our market, and that is what you have to be very very careful. You have to buy only the stocks where is the comfort. Now what about, you will ask, what about that big four mega trend like defense, PSU, renewables, railway? These are the four mega trend which are going on from last 2.5 years. Now here you have to be little bit careful, guys, because if you see in last 1.5 month there is almost a drop of 30 to 40%. Now when you have a drop of this type of fall, no, it may consolidate little bit, and this is where you have to be little bit careful buying all these type of mega trend from here. And I think that is my personal opinion, that we the best of the best returns, which if you ask me about these four sectors, are behind us. So first 2 years what you got six, and like many of the stocks were almost up by 4 times 5 times, I think that type of return is behind us. So be careful if you are going with an expectation of that type of not for 60-70% return in a year. I think that type of return is behind it. So all this sector may go up, but it will go gradually up. And as the stock has already run up a lot, I think it may take a breathing. And no, that's why no, it's always been said that don't have an over exposure in some specific sector. You have to be very very careful when how much exposure you are having in a particular sector. So all these defense, railway, then PSU, or you can talk about renewables, all sector, unless the stock is very good, you have to be little bit careful because they may correct also. And guys, if you have a long term investing, then you can stay invested, nothing wrong in getting out, because if it is fallen by 30-40%, does not make any sense of getting out at this level. So keep this in mind related to this mega trend, guys, because this is little bit in a pause. Otherwise, no, overall the market looks quite good, and I think from here also legs are there. It will be very very volatile. Just be careful as the valuation is quite high. You when you select a stock, keep a valuation of a stock in mind before investing. So guys, if you have any question related to any stock and sector, please put it in the comment box, and do like and share this video. I'll keep it till here only, and I'll come up with the new video tomorrow. But again guys, if you want to understand our about our stock recommendation also, guys, we are giving the link below. I'm a SEBI registered analyst, and we provide the stock recommendations. So it's okay, click that and just join, check out our services. If and do join it, it is very very beneficial at a very very reasonable price. Okay, so thank you very much for joining, guys. I'll see you in the next video. Bye bye.